You gotta have your mic plugged in for it to work. That is a little trade secret. So what I was saying is, we'll start here in just a minute. Full disclosure, my brain's a bit fried. I'm on hour number 12 of technical analysis and trading today. And I committed to doing this stream before things got a bit nutty, so we're sticking with it. We're going to keep it to an hour long. I'm going to do my regular technical analysis rundown, and then I will interact with you all and do some coin requests and answer any questions. So if you're requesting coins now, you're wasting your time. I'll let you know when it's time because I'm not reading the chat until I say I'm reading the chat. Appreciate everybody tuning in from all over the world, I'm sure. So, the first thing that I'm going to talk about today is something that I've mentioned before, and I'm just wanting to burn this in all of your brains. If you are actively trading the cryptocurrency space, you must be following the broader stock market. You must be understanding what the different major sectors are doing, how they are interacting with each other, whether we're seeing fear or whether we're seeing rotation. I go over this in the stock market videos I put out every day, and that's all I talk about. So I highly suggest watching those because the past two most bearish days that we've seen in Bitcoin in the past 2 weeks have been because of tech sector weakness. How can I say that? Let's look at May 4th and today. And you look at the NASDAQ 100 futures chart. Here's May 4th and here is today. So today I was watching the stock market and I was getting red flags of fear in the tech sector. As soon as that started happening, I made the post on Twitter talking about this live stream and watching for potential weekly lower highs. In the chat room, I started saying, guys, got to have game plans just in case we set weekly lower highs. And it was all based on tech sector in the stock market and nothing to do with the Bitcoin chart, aside from the fact that we're watching for a weekly lower high. I cannot stress enough, the fear in the broader market absolutely impacts the cryptocurrency space, and it continues to do so. So I am watching the NASDAQ futures chart, which had an extremely bearish day today, and I'm watching tomorrow to see if the bears get followed through or if we see a bounce to alleviate some of that fear. The correlations are strongest when there is stock market fear, but they fade. They don't last forever. They last as long as the fear does, and then once the fear subsides, we see that correlation decrease, and we then see the crypto bulls in the recent bull market, they start to take back over. So that's what's happening now. We have an oversold bounce underway. So I'll talk about some of the trades that I took on this oversold bounce, but we're going to start bigger picture. So we know Bitcoin on the monthly time frame is an inside bar currently. And I just want to go over how these charts generally end because, again, we have to anticipate monthly consolidation. It will happen at some point. It is inevitable. Whether it's going to be now or in a few months, we don't know. Every day gives us new probabilities as to what is shaping up. But all you got to do is look at the stock market, massive euphoria, and a ton of individual names and how they all topped, whether it's NIO in the EV space, whether it is PLTR, a recent IPO, whether it is Zoom after the huge COVID run-up. They run up massively, they top out, and then they consolidate for months. So we just have to anticipate that that is the way that these cycles go. So I'm not calling a top, but I do know that when we see monthly consolidation, it's going to catch a lot of people off guard because they get complacent in a bullish market. The current setup that I'm watching is on the weekly time frame, and the question that I am going to be looking to answer over the next week of trading, are we going to V-shape to a new all-time high in Bitcoin, or are we going to set a weekly lower high? There are three ways that this can play out, and only three ways. Bull break to all-time highs, weekly lower high, confirmed weekly downtrend into monthly consolidation, or a weekly lower high and tightening weekly range before an eventual break in either direction. Sweetie Pants wants to go outside. If you hear any strange noises, it's frogs. It's the frog season and they're ripping. So, is this a weekly lower high being set? We can't say that yet. Today was a big shift towards that possibility, absolutely, but I am still watching these little higher lows. We had a higher low at 52.3K, another one at 53K, and now this one, bulls are hoping, is another higher low at 53.9K. We have to lose these little higher lows if we're going to say our weekly lower high has been set. So we had fear today, and that fear really magnified when the stock market closed. I went straight from my end of the day live stream in the stock market straight into trading the cryptocurrency bounce. And what we're looking at right now in the shorter term time frames is for an hourly lower high to be set. And the way that the bounce played out was just our zoom out game, one time frame at a time. The first bounce, we needed a 2-minute trend change. And when things get hectic, exchanges don't work. And TradingView, look at the gaps here and look at the volume. We are missing volume data and we are having gaps in the chart. It made it difficult for me to trade this bounce. I couldn't compare volume. I wanted to see what's the bull volume look like on the bounce? What does the bear volume look like compared to that on consolidation? If I don't have that data, I am flying blind to a certain degree. You have to anticipate these exchanges are going to have issues when there's volume and when stop losses all trigger like they did today. So we had a 2-minute trend change. From there, we know to zoom out and just scout a 5-minute lower high. We hit 5-minute EMA resistance. We scout a 5-minute higher low. We get a 5-minute trend change. We zoom out. We scout an hourly lower high. If you've been watching the crypto videos or any of the videos, you know that that's nothing new. That's how we trade bounces. And to be completely honest, the volatility today, I've seen more gains today than I saw at any point in the last 2 weeks because this is my trading style, bounces. The slow grind up, I don't make a lot of money, which is why I let my no-touch long-term positions do the legwork for me. You give me these dumps and these bounces, and that's where my ability as a trader shines. That's my edge as a trader. So I was all over those time frames, and I was just doing that. I traded ETH, and I scaled in, and I market bought even. I use market orders when things get insane like this because I will pay the extra fees to ensure that my orders are filled right when I want them to. Because the last thing I want is to set a sell order and we just don't get there and then we start dropping. And now I'm just scrambling to drop my limit order and the price is dropping as well and it never fills. So I will easily and gladly pay the fees to just say, give me coins and take these coins right away. So I market bought. After the initial dump, I didn't nail the bottom. My initial buy was probably in the low to mid 37s. Knew to just be looking for a 2-minute lower high. EMA 12 resistance, sold a little bit. Then I zoomed out and waited for the 5-minute higher low. I scaled in on this 5-minute higher low. And right before this stream, I just exited all of my coins in Ethereum in 40.50 to 40.60, knowing that an hourly lower high is the most likely scenario. Now we watch for an hourly equilibrium. Before bed tonight, I'm going to be scaling in a couple positions for an hourly higher low. If today's drop spooked you, shook you, made you realize, uh-oh, that's a red flag, but you need to learn from this because if you look at the daily chart of ETH, this drop, if you've been trading this space in 3 years, 4 years, you know that the drop we saw today is nothing compared to what we've seen in the past. You want a big drop? It would have been like this, and we would have taken down the low of the previous 6 days in a row. And that can happen. Fortunately, as we see larger market caps, we see larger volume, and it's usually when you have less liquid exchanges and less liquid coins where the stop losses flush and things get insane. And we're seeing less of that because there's more dollar volume, in my opinion. But you have to be prepared for it, and you have to use stop losses if you do not want to sit through some significant consolidation on the daily time frame. That drop from ETH from the high of the day to the low of the day was 13%. And I don't have the numbers off the top of my head, but I know in 2017 and 2018, those drops would easily be 20, 30% on some of the more significant ones. So again, just have to prepare when everybody gets complacent bullish, everybody over leverages to the long side, and you get those flush resets where over leveraged longs get liquidated. And today was a version of that. The most important thing into tomorrow is, can the bulls confirm an hourly trend change? I'm looking at Bitcoin. I'm looking for an hourly higher low because that's the most likely scenario with the retracement of 50%. We bounced 50% back from what we dropped. So that makes the hourly higher low the most likely scenario. One of the ways that the less likely scenario, I should say the only way the less likely scenario will play out is if we see increasing bear volume to the downside. If you do not see increasing bear volume, it is safe to assume an hourly higher low is coming. So how do I make that entry? If we see this current candle break the pattern of a higher low every candle, our hourly lower high is set, and we have to lose the 5-minute uptrend as well. That's another way to watch for it. We have to confirm a 5-minute downtrend. Either way, I'm just watching the higher low every hourly candle pattern. When that breaks, our hourly lower high is set, and I then start scaling in. Everything that I'm doing is based off the low, because if we were to drop to the low, that is a red flag for me, because I'm anticipating an hourly higher low. So my entries are going to be based off that anticipation. I never want to run out of ammo. If I am scaling into a position, I always want to have my last orders not fill, because as soon as I run out of ammo, I am no longer in control of the trade. If I scale in 3 out of 5 positions that I'm willing to, I'm extremely comfortable in the position, and I can maneuver around and keep myself comfortable. As soon as I'm out of cash, I am at the mercy. I'm like a leaf blowing in the wind, and I never want to be in that spot. If that happens, you scaled in too quickly, and it's a red flag. So I will set a couple scale in orders. I will use the low as my stop. And if we change the hourly trend bullish overnight tonight, zoom out game. All we do is zoom out, and we'll scout a Bitcoin 4-hour lower high to be the most likely scenario. And then tomorrow into Wednesday, can the bulls confirm a 4-hour trend change? If they do, we zoom out. And at that point, we'll have to see where we stand. But one time frame at a time, hourly trend change, zoom out and scout a 4-hour lower high. And then the bulls need to change the 4-hour trend if they're going to prove notable follow through. And over the next 2 days, you better believe I am staring at the NASDAQ chart on a daily basis to say, is this fear significant? Is fear subsiding? And it will have an impact on how I trade this cryptocurrency space. We will have to drop to lower lows if the weekly lower high is going to be set. If that's our low and we don't revisit this low for the next few days into this weekend, then bulls keep their control on the daily time frame as far as I'm concerned. Dominance chart. So the dominance chart shows us altcoins dumping faster than Bitcoin and then bouncing more significantly. That's no surprise. That is the pattern that we always normally see, with just more volatility in both directions. Bitcoin is Big Daddy. We need to watch it for correlations, but the percentage moves are going to be different. When things get as volatile as they just did, I would suggest focusing on one coin, and you want one screen for Bitcoin and one screen for the coin that you're trading. I know some crazy people are scaling in all over the place. In my opinion, my brain doesn't work that way. I am completely focused on one name, and when we're as volatile as we saw today, that one name has all the opportunity that I need as far as significant moves. So I'm going to be watching this Bitcoin daily, or this dominance chart, tightening up on the hourly here, because what it's showing me right now on this bounce is, again, altcoins are dropping more significantly than Bitcoin on this hourly lower high. Let's look at ETH/USD on the hourly. Hourly lower high is already set. We broke the low of the previous hourly candle. Our hourly lower high is 40.71 resistance. We are now scouting an hourly higher low, anything above 36.57. There are a number of ways that we can be scaling into this position. If ETH/USD heads back to 5-minute oversold, I can start scaling in, anticipating that the hourly higher low will come shortly after. I'm watching this 5-minute downtrend. If I want to be more aggressive, I'm scaling into weakness. If I want to be patient and more protective, I am waiting for a 5-minute trend change to set up. Let's just say this 5-minute downtrend continues, little bounce, one more leg down, then a big bounce. If this bounce is big enough, then I'm saying, I think that's our hourly higher low. I can either market buy on the way up and just use that low as a stop, because if I'm wrong, then I'm wrong, and I want to be out of the position. Or I wait for the bounce to top, and I wait for the 5-minute higher low, and I enter on the 5-minute higher low using that level as a stop. That's a very big difference between using this level as a stop. If we're talking risk to reward, my risk is much more contained if I am playing off a recent level on this consolidation than if I'm playing off the low that's all the way back down here. So I want to personally move my stop up as soon as possible whenever I think that the hourly higher low is forming. So again, as soon as I'm just looking at the timing right now, I'm going to stream for 45 more minutes. I'm probably going to be starting to make some moves at the end of the stream for entry on the hourly higher low. And again, red flags would be volume. One thing that doesn't help us on this volume is because the exchanges and the data was disrupted here, I don't have this volume data. So again, as I was saying, comparing the bear volume to bull volume wasn't possible here. And even now on the hourly chart, I don't have a great gauge of what the bull volume was on the way up. So I'm keeping a close eye on the bear volume on the way down. And if it's not increasing, the hourly higher low is most likely. And again, if the NASDAQ dumps overnight tonight, we have to pay attention to that as well. But I do believe that an hourly oversold bounce is going to happen on these NASDAQ futures over the next few hours as well. So ETH USD, we're scouting the hourly higher low. The BTC pairing of ETH is still extremely strong. That's why I was personally choosing to trade ETH over Bitcoin, and it is now forming an hourly equilibrium as well in the same way. So the BTC pairing is directly correlated to the USD pairing, and that means we're in the spotlight still. So best case scenario for the bulls will be breaking the hourly equilibriums bullish on both the US dollar and the BTC pairing. Whatever altcoin you are trading, that's what you want to see happen. Hourly correlation and bull breaks in unison. If we were to see the ETH USD bull break on the hourly and confirm an hourly trend change, but the BTC pairing didn't do it, that's a red flag for me in the short term. Have to ensure that they stay correlated to each other. Just as another example here, Litecoin, again, volatility more significant here. Hourly lower high shaping up. Low of the dump, high of the bounce, scouting an hourly higher low compared to 337.84. And then we need to confirm the hourly trend change, and then we zoom out and we will scout a 4-hour lower high to be the result of that hourly bounce. The bulls are just hoping that these time frames continue nice and orderly as they have been, because again, what this does is it flushes the order book on the way down. It sees a rush of fear, and then if we don't revisit those lows, we can just keep our slow bull grind back up. But again, if the lows of this drop break at any point over the next few days, the probabilities of a Bitcoin weekly lower high being set will increase very significantly. So those lows are now the most important level for me for the rest of the week. So weekly time frame is key. And I would normally, if you don't tell me this is a Bitcoin or crypto chart and you show me this chart, I'm anticipating a weekly lower high is the most likely scenario because this pullback was significant and we lost the higher lows. Now, of course, Bitcoin and crypto more than anybody else can keep the FOMO and euphoria going. And I know that the probabilities of a bull break are more likely than if this was just any given stock. But again, I'm just having two game plans. You have to have game plan number one, bulls continue, all-time highs, euphoria, party time still goes on. Criteria, or I should say game plan number two, weekly lower high is set and we're headed for monthly consolidation. You have to have a game plan for both. If your game plan is I'm holding no matter what, then that's fine. You've already established it. But if you have swing positions, you have to have game plans for those swing positions in case we see monthly consolidation, because you do not want to hold those swing positions into a 20-30% pullback from the high. The frogs all live under my hot tub cover, and they are reproducing. All right, let me think if there's anything else I want to say before I start reading the chat here. Hourly trend change is a must. If we do not change the hourly trend, it's a big red flag. I favor that an hourly trend change is the more probable scenario. But if I'm looking to scale into ETH right now, and I look at this lower wick on the hourly, say, oh, maybe that's our hourly high or low, and I start scaling in, look at Bitcoin. We haven't even set the hourly lower high yet. So looking at this Bitcoin chart would keep me patient scaling into ETH USD because we have not topped out on this Bitcoin bounce yet until we lose the pattern of a higher low every candle and we scout the higher low on Bitcoin. NAS 100 USD is the NASDAQ futures chart to be paying attention to. You can see the weakness at noon is when things really turned up. It was 9 a.m. and then at noon. And if you look at Bitcoin during that point in time, here is noon, 5-hour drop. They did the same thing. Fear permeates different markets. The bots and the algos are correlated, and traders like myself are making decisions with influence based on the stock market. All right, I'm going to do a couple of the obvious coins here first, and then I'll look at the chat. So let's go Link. Everybody's going to be doing the same thing, just to varying degrees. Link hourly lower high is set at 48.34. We have to form an hourly high or low compared to the low of the dump. And watch the BTC pairings on any altcoin that you're trading. Directly correlated with its BTC pairing. They both need to break bullish together. Some of these altcoins will confirm hourly trend changes on their US dollar pairings and not on their BTC pairings. And you want to be in the altcoins that confirm the hourly trend changes on both of their pairings. XRP is going to be doing the same thing. Why is everybody doing the same thing? For the same reason that Bitcoin drops when QQQ in the tech sector drops. Because correlations tighten up significantly in fear. What's Doge doing? Sell the news event. Hope some of you guys nailed that bearish. That was a very obvious setup. I must admit, heading into the event, I thought Elon Musk knows markets. I've seen him intentionally squeeze shorts in Tesla multiple times with timing his news drops. And I thought, it's very obviously a sell the news event. If he was a sicko, he'd set up a bot to buy 500 million of Doge while he was live on Saturday night. But that didn't happen. Bull break, failed to take out the high, and then sell the news event. 4-hour tightening range. Did we hold the double bottom? We did. Bears are in control though. We're definitely going to be scouting a 4-hour lower high on any bounce follow through. And it's looking like, technically I'd say we're still in a daily uptrend. But the size of the pullback, once we do find a daily high or low, we'll certainly be scouting a daily lower high to be the most likely scenario. If you're looking to short Doge and you're not in at this point, you're either waiting for a 4-hour lower high if you want to be more aggressive, or you're waiting for a daily lower high if you want to be nice and patient. And that's what I was saying on this Bitcoin bounce. Don't be in a rush to short. If you're looking bearish and you want to be brave, wait for the hourly lower high. We need some of these longer term time frames to play out before we can be looking bearish. And at this point, there is potential top fishes to be had for those looking for an hourly lower high. An hourly EMA 12 is not in play yet, but it will be in play if this bounce does see any more follow through. And again, use those EMAs. Look at the 2-minute. 2-minute. Well, we rejected on ETH. Again, it's a bit choppy here, but we rejected from the 5-minute EMA. Did we reject from the 15-minute EMA? Not in any meaningful way. But the EMAs are great visual guides for targets, both for entries and for exiting positions. I traded coin today, and a 5-minute bull flag I entered, and my target was the 5-minute EMA 12 support, and we held it like a champ. We held it, and then losing it was the most notable shift that we had seen to the bears at that point. Use the EMAs. If you've been watching me, I assume you already do. All right, what else you got here? I'm reading the chat now. Leash. The Doge killer is Leash. It's definitely in a breakout. Hourly most important support is 152. What's our volume? Oh, our volume is not, you can't trade this here. We're talking $1,000 of volume an hour. So unless there's more volume elsewhere, can't trade that. So again, almost everything that I'm about to look at right now is going to be doing the same thing. Altcoins are setting their hourly lower highs. Bitcoin has yet to do so. Altcoins dumped harder, bounced harder, pulling back harder. And if they confirm an hourly trend change, that percentage move will likely be bigger than Bitcoin. So honestly, I'm just going to be repeating the same thing. It'll be notable if any coin that I look at is not doing that, but they are all doing it. Fear is big for correlations. Any name still in a daily uptrend? All right, let's distinguish altcoins right now. So the altcoins that I would be focusing on are altcoins still in a daily uptrend, ideally coming off of all-time highs, and their BTC pairings is the most important factor for me. Needs to be in the spotlight with the BTC pairings doing the same thing as the US dollar pairings. Any name that's not in a daily uptrend is weaker than a name that is. Any name whose BTC pairing is not forming the same hourly equilibrium and has the same daily chart is weaker than a name that has that correlation. So anytime someone asks me about an altcoin, I know what Bitcoin's chart looks like, and all I do is pull up the Bitcoin pairing first. That tells me, is this coin seeing more strength than Bitcoin or more weakness than Bitcoin? And that's what I want to know. If Bitcoin is the gauge, I want to know who's stronger and who is weaker. Because if it's weaker, then I'm just going to be looking to trade Bitcoin. If it's stronger, that's where there is more opportunity than Bitcoin. And the BTC pairings give you that information. I've been keeping an eye on YFI BTC. Oh, there it is. Oh, that's so beautiful. I haven't looked at this since this morning. Daily inside bar, daily high or low, double top. That's the move that we were looking for. Been highlighting this for 2 days or 3 days because the setup was there. Yeah, cup and handle. Oh yeah. Not an ideal cup and handle because it was a higher high on the right side, but that's my technical analysis, money face. Beautiful follow through. I've been keeping an eye on sushi. It didn't have as ideal a setup. Nah. But that YFI was a beauty. So again, let's just go back. What was the signal? If I'm looking at YFI USDT, we have a daily bull break with no follow through. That's an initial red flag for bulls. Pull back, we're holding EMA 12. Okay, good sign. And bear break here with the crypto dump into a V-shaped recovery. If you're looking at YFI BTC, there were no red flags at any point. The daily inside bar broke bullish, and then we saw massive follow through. Inside bar bull break was at, we'll just call it 95. When did that take place? 4:15. So as Bitcoin is dumping, YFI is holding up extremely well. And then as soon as Bitcoin starts bouncing, YFI USDT ready to go for follow through. ETC, what's it been doing? Daily inside bar, hourly, same thing. Hourly lower high is set. Need the hourly trend change back to the bulls. Oh, that was on the weekly, never mind. We're scouting a daily high or low. Look at that daily EMA 12. Perfection. If we can change the hourly trend back to the bulls, we zoom out. We scout a 4-hour lower high, anything under 129.70. I'd be scouting a name like this for the possibility. Let's say I want this dump to enter into a swing trade. For me personally, I'm treating all these dump positions as day trades. And maybe I'll enter an hourly high or low for a swing overnight with a stop to protect it. But if you're thinking bigger picture, which is perfectly fine, and you're thinking swing position, if this was a flush of fear and we're done with the fear for now, then what I would be trying to do is enter a position where I can have a break-even risk. So let's say I played this bounce. If I sell half of my position with a $10 gain, let's say I enter at 95 and I sell half at 105. My break-even is now 85. I can just stick my stop under this low and have zero risk and say, okay, well, maybe this is our daily high or low and we get bounce follow through and maybe we get a move up with an hourly trend change and then it takes time for a 4-hour trend change and then the daily bounce gets underway. Maybe we can follow through to 140. So there are many ways to trade this, but positioning yourself in break even by partial position exit is just, in terms of mental ease of burden and simplicity and stress-free, selling partial position and having risk-free trades. It's all I do all day trading. Is I'm just constantly selling partial positions, put my stop, risk-free, let it try and play out. And this bounce is giving that possibility. Looks like Bitcoin is probably setting our hourly lower high, judging by what Ethereum is doing. Close to it. So again, that lower wick on that hourly candle for Ethereum, if I'm too antsy here and I'm rushing in, the Bitcoin chart told me we haven't even set the hourly lower high. Do not rush into it. Be patient. And once Bitcoin starts its hourly consolidation, then I look to begin initiating my positions for the hourly higher low. And at this point, after selling at 40.50 and 40.60, the remainder of my position, anything that I rebuy here is going to have me real comfortable. So Atom BTC, hourly equilibrium is forming, daily chart trying for a higher low. So we are correlated, and if the bulls can confirm an hourly trend change on both pairings, then it's possible our daily higher lows will form. And of course, we have to see Bitcoin change the hourly trend for any of this to happen. If, I'll say it one more time, if we break the lows of this dump with no notable follow through from here, I instantly tighten up as a bull. And I am more picky as a bull. I will then watch for 4-hour oversold conditions on a lot of names. In my opinion, that does not happen unless we see significant stock market fear tomorrow. Because again, the initial wave of fear has impacted everybody that's going to act on it, and we'll need new fear for another leg down. BTC bulls absolutely have proof. This is where a lot of traders get thrown off. BTC bears have all the burden of proof on their shoulders on the monthly and weekly time frame. BTC bulls have all of the burden of proof on their shoulders on the hourly and the 4-hour time frame. It's a tale of two time frames. Long term, still all bull. Short term, bulls have to prove it. You have to determine what time frame matters most to you. Swing traders, it's weekly and daily charts. Day traders, the hourly chart is key. All right, let's look at some stocks. Riot, these are the miner names. It's been notable to me that these miners, look at their monthly charts. They've started their monthly consolidation already. That's 1 point in favor of cryptocurrency bears. It's not a big point, but it is a little tally. And that's Riot, MSTR with Michael Saylor. Look at the monthly chart. Blow off top, monthly consolidation. And these charts are much weaker than cryptocurrency itself. And honestly, I have been waiting to short Riot, and I missed my opportunity right here on a double top at 44.16. And the reason I hesitated to go bearish on it was because I was waiting for cryptocurrency to dictate to short, when in reality, the short signals were happening long before any red flags in the cryptocurrency space. The question now is, will the cryptocurrency space follow in the footsteps of the monthly consolidation that is ongoing in these names? MARA, same deal. Monthly consolidation is now underway. Scouting a monthly higher low, absolutely. But euphoria has left the building, and we're now going to start watching for fear to enter the building on these miners. How did GBTC close? Weak, but still very similar to Bitcoin overall. So the only clues the miners are giving are potential further caution to cryptocurrency bulls. There's nothing bullish about those charts relative to the cryptocurrencies themselves. How low could ETH go? Let's just take that question at its surface. How low can whatever go? Lower than you think is the answer. Always. Can always drop more than you think. Whenever I'm looking to play an oversold bounce and things are dumping and there's a lot of fear, I am constantly saying to myself, this can drop 5 to 10% lower than you think. Which is again going back to why, as I'm scaling in, I never want to run out of ammo. Because if I run out of ammo, I scaled in too short or too soon, we're still in free fall, and there is nothing I can do except sell at a loss. There is no management. If I enter half of my position, and then let's say I enter 80% of my position, I'm almost running out of bullets. And then we see a 5-minute oversold bounce, I can sell a little bit of my position into that bounce to get bullets back. I get ammo back, and I get some control back. I need that cash to be able to maneuver around trust me, I've been there. There is no lonelier place on the planet than when you are fully in a position and it is a falling knife and there's nothing you can do. So ETH, monthly consolidation. Again, these weekly charts and monthly charts are absolutely insane. And the only exposure I have is in long-term no touch, because ETH, once we top out and once we start monthly consolidation, it can very easily pull back 40% plus. If you are willing to sit through 40% pullback, that is perfectly fine. The most telling thing for me for the rest of this year is going to be when monthly consolidation starts, not if, when it does, do we see continuation? That will be a huge vote of confidence for me. If we see buying of the dip for a monthly bull flag or a quick monthly high or low and then new all-time highs. The last thing the bulls want to see is 2017 and 2018 again, where we started monthly consolidation and that was it. Slow bleed. No monthly high or low. No bull follow through. It was just, that's it. That's the top. And now you're done. So if that were to happen, we would just slow bleed back down. And that would be worst case for the bulls. Best case, monthly bull flag and follow through. Be a huge statement of confidence. Because that tells me, number one, shorts aren't getting followed through and they're squeezed out. But number two, bulls that have been waiting to buy the dip do so, and the demand that they have for coins is outweighing profit-taking supply. And that's what gives you a bull flag. Bulls quickly buying dips and seeing follow through, and anybody that tries to short a bull flag quickly gets squeezed out and put underwater. So we're watching 5-minute downtrends, and Bitcoin still has not started hourly consolidation. ETH USD bulls will have to regain the 5-minute trend in their favor for signal number one that our hourly high or low is being set. If Bitcoin breaks 55.4, now we'll call it this level now. If Bitcoin breaks 55.5 thousand, our hourly lower high is set. But this is a very nice recovery right here. Right back up to testing the high of the bounce. And you can see ETH is still $100 below its high of the bounce. And that's why the dominance chart is bouncing, because the altcoins are pulling back while Bitcoin has not topped just yet. XCH. So if it's a new coin, there's probably not enough price history to do much technical analysis. The most important support is 869, and the bulls must break 1450. I would not be surprised for a 12-hour equilibrium to form here. Watch for a lower high compared to 1450 unless we see increasing bull volume. An equilibrium is the most likely scenario, and how that equilibrium breaks will have complete dictation, will completely dictate our short-term direction. 12-hour tightening range, expecting a lower high compared to 1450. So for the Bitcoin dominance chart, what I am just watching, again, keep it extremely simple. The Bitcoin bulls have to prove something in dominance here, because all we have seen is 4-hour brief bounces and zero follow through. We just topped out with a double top at 46.48. Again, we have no 4-hour trend changes. When is the last time we've seen a 4-hour higher low and higher high on the dominance chart? If you are, let's just say you were short the dominance chart, or playing altcoins long instead of Bitcoin, there has been zero signal to stop. There's no fake outs, no nothing. Ever since we started collapsing 5-6 weeks ago, there has been no 4-hour trend change for the bulls. So keep it simple. Watch that pattern. Watch for a bull cross of the 4-hour 12 and 26 EMAs. They crossed bear 6 weeks ago. They have not crossed bull since. When they cross bull, it'll be notable to us as a shift. Another thing in hindsight, what signaled alt season? The dominance chart getting tighter than it had been at any point in years in an equilibrium and breaking bear. And this was a learning experience for me. I did not expect that much follow through. I was recognizing this is a very tight pattern, very unusually tight. This is going to be very key to be watching how it breaks, but I didn't get aggressive enough. Really, it was ETH. I didn't get aggressive enough longing ETH on this break. And that is something that I will take with me for the next cycle. I am applying stuff from 2017 and 2018. Again, this is a marathon. I was 7 years into trading in 2017, which is the only reason that I smashed this bull market and kept my gains, because of the experiences I learned and the lessons I learned doing things wrong years before. And now in this market, I am paying more attention to Bitcoin pairings and altcoins than I did in 2017, 2018. Back then, it was just buy Bitcoin, take your profit. Buy ETH, take your profit. Buy Litecoin, take your profit. Back into Bitcoin. It was just those three, just boom, 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 musical chairs. This is a much different environment. It's a whole wide world of alts, and everybody's getting their turn, but it's much more tricky because there's so many places. When there were less coins, it's a funnel effect. Your money has only so many places it can go. And when you open that up now with 5 times as many projects that everybody's saying is going to be the next whatever, there's a funnel effect gone, and your money is more dispersed out there. And it's a bit harder to track whose coin turn it is. So I am not trading altcoins significantly in this market. I'm trading ETH and like some Litecoin and some Link and Bitcoin, but you better believe that the next time a bull market rolls around after a bear market lasts a notable amount of time, I am going to take the information and the lessons that I have been staring at for the last 8 months with BTC pairing charts. I have gotten so much better at BTC pairing charts and knowing what to look for this coin's turn to be next than at any point in my life. So I know the next time, whether it's in 2 years or 8 years, I will utilize this information and make a lot of money off of it. And so I know a lot of people are looking at this current market and trying to learn at the same time as make a lot of money. That's very, very hard. Trying to learn should be priority number 1, because I promise you the opportunities, as long as the world doesn't collapse, which I cannot guarantee, the opportunities in markets are endless. There will always be another hype market. USMJ is going to be hype. Psychedelic stocks are going to be hype. Crypto is going to go into a bear market and it will be hype again. We're going to be trading a technology 5 years from now that doesn't exist in this moment, and it's going to be a hype market, and there's going to be a ton of money to be made. Focus on learning from your mistakes, learning lessons, and applying them to the future. We have so many traders in the chart, guys, that in 2017 and 2018 missed a ton of opportunity, made mistakes, held bags, and they are crushing this market because all of those lessons from 4 years ago are being applied, and it's going real well for a lot of people that learn those lessons. Years and years, bare minimum of 3 years if you're going to say that you're starting to get trading and technical analysis down. And then once you hit years 6 and 7, you start getting your stride, and 8, 9, 10, you can do it in your sleep. And the power of the confidence to know that you can click buttons and make money at any point that you want is very significant. And it makes, money does not buy happiness. Money buys you a lack of stress. And there are so many times in my life where something will happen And I'll think to myself, I am so grateful because I know for so many people that is a day or a week ruiner. And the easy example I posted on Twitter recently was just went to the airport to go on a trip however long ago, long time ago, with my girlfriend, and I bought her the wrong ticket on the wrong flight. And so I get to the counter and they say, oh, your flight's tomorrow. And I just shake my head and laugh. What an idiot. That's a $500 mistake. I've got to fork over $500 at the counter right now. For some people, that starts their trip off on a very sour note. And for me, having the confidence of trading and technical analysis with the years put in, I know I laugh and say, well, tomorrow I can click buttons and it's a high probability I'll make that $500 and I won't have to think about it ever again. And that is extremely powerful to de-stress your life. It won't give you happiness. It will give you less stress, which can help lead to happiness, but it's certainly not the only key. I think we already looked at ETC, didn't we? Yeah, we're looking for the daily high or low. Nice EMA 12 support, hourly trend change needed, just like Bitcoin. And if the Bitcoin bears confirm a 5-minute downtrend here, hourly lower high very likely set. And if we don't, if we hit a higher high, hourly EMA 12 will then be tested. The greater the bounce retracement, the greater the probabilities of a high or low. And again, if it's 50% or greater, equilibrium is most likely. If it's 382% or less, bear flag is likely. MindMed is a psychedelic stock, but again, I'm only going to bring it up here just because it is showing you the extreme euphoria to fear. Those who know how to play this game for a decade plus make the most money the faster they can flip your emotions. Euphoria one day and fear the next, people are making bank. So you will find a ton of monthly charts that look like this, a ton of daily charts that look like this. The faster you run up, the more significantly you're going to pull back. Learn the psychological cycles of FOMO into fear. And again, I could just run through so many charts right now whose monthly time frames have that. All these ARK ETFs, massive FOMO. And at this point, we've pulled back 50%. No, less than that, 35, 40%. And look at the daily chart. It's just bears. It's all bears. Only bulls, bears non-existent, and now bulls nowhere to be found. The faster they flip the herd's emotions, the easier it is for big money to make money. I was going to do UMA, but then you did too many messages and you put in timeout. Can I explain again why I won't look at ETH or any other altcoin unless Bitcoin forms a new hourly lower high? Because I know a Bitcoin hourly lower high is the most likely scenario on this bounce, whether it's now or a little bit higher, I don't know. But if I look to begin to enter ETH now, and then Bitcoin starts its hourly consolidation, I'm going to be entering ETH too early. I want to be entering ETH when Bitcoin is showing me that an hourly high or low is close to incoming. ETH pulls back more than Bitcoin and it bounces more than Bitcoin. So if we start pulling back on Bitcoin, we can easily drop another leg down on ETH. So I have no confidence that an hourly high or low is forming. You know, if ETH are going to give us an hourly high or low, that would mean Bitcoin would need to just keep grinding up for another 2-3 hours, in my opinion, before topping out. Every decision that I make in cryptocurrency is based off of Bitcoin and applied to altcoin charts because the correlations are so significant. It's dictating everything. Names can be stronger, names can be weaker based on the inflow and outflow of capital, absolutely. But at the end of the day, when volume slows down, here's another key point. When volume slows down, the volume of bots and algos and automated trading is much more impactful. Think of it in terms of percentages. Human traders, bots and algos. When human traders are reacting to fear or to FOMO, their money has a bigger impact on the market. When that's not happening and when things are tightening up and volume's dwindling, the bots and the algos rule everything because the percentage of the dollar volume that's going through is higher for the bots and the algos and automated trading in a lower volume environment than it is when there's a bunch of humans clicking buttons. So a bunch of humans clicked a bunch of buttons to buy this dip. And then some humans are going to be shorting this hourly lower high. And then if we get hourly equilibriums that tighten up, that's when the bots and the algos start to see more control because there's less dollar volume. It is possible that the miners in crypto are giving clues to monthly consolidation. Again, it's not something I would act on. It would be something that I would have in the back of my mind. And again, just ensure that I establish the game plan in case that happens. Gold miners definitely give some signals before the metals themselves do. I haven't been watching the crypto miners enough to see if they lead the moves. Let's just look at dollar volume real quick. So Riot today, dollar volume, that's a good amount. 3 million, 30 million, 45, no, 30, 300, $450 million. That's a lot of volume. So I'm just looking to see, where is more volume trading. Obviously, the cryptocurrency space as a whole, it's possible. Again, not something to act on, just something to factor into your game plan and factor into probabilities. If the crypto miners right now were near their highs, I would absolutely increase probabilities in my head that Bitcoin sees a new all-time high. But because they're at their lows and seeing monthly consolidation, that knocks off a few percentage points to favor the potential of the weekly lower high and potential monthly consolidation. Everything is always probabilities. And every hour, every minute, you get new information that changes what those probabilities are. So I will never understand why traders make a prediction or make a statement or establish a position and then just stick with it because that's what they said. Obviously, you don't want to constantly be changing your trade game plans, but you have to be reacting to the new information that we get. How do you get the EMA 12? Right-click, add indicator, EMA, change the settings to 12. Honestly, if you're looking for new coins coming out, it's a crapshoot because 90% plus of them will do nothing, in my opinion. You see it in every hype sector. MJ companies popping out of nowhere that are just scams or scams. If you want probabilities in your favor, stick with the tried and true names. Yes, some of the smaller coins will see significant moves, but again, if 1 in 500 coins is making a 10,000% move, you have a 0.2% chance of getting that coin. So unless you're putting in thousands of hours of research, which some people are, you're not going to have an edge trying to find the next new coin that's going to run. And when we see the next crypto winter, a ton of these coins are going to lose 70% of their value and create a whole new generation of bag holders. I talk about BTC pairings and altcoins in every crypto video that I do. And if you really want, go back and watch every one from the last month. They're all there. You can go back and watch. Some Chart Guys members have done this. Every video that I ever did is on YouTube. You can literally go back and watch my journey as a trader on a day-by-day basis. I think I did a video every single day. And you can watch how I was reacting to things and how I was trading those things. And it's a good it's in my opinion one of the most complete examples of a day-by-day basis of a full-time trader going 3,000% and most importantly, keeping those gains and just talking my way through it every single day. It takes a lot of time and I would never do it personally, but it's there. One more. I have started doing wedges more in the last 2 years than I did any time before. Absolutely good observation. You've been following along. What percent of my portfolio is... I lost it. What percent of my portfolio is for intraday, swing trade, and what percent is long-term no touch? So I got stock money, I've got crypto money, and I've got long-term no touch. Right now, long-term no touch is probably 66% of my day trade and swing trade crypto monies, which is crypto monies are a third of my stock monies. And I will always favor the stock market for trading as long as fees are free and as long as fees are high as in crypto. My trading style as a scalp day trader, I am market buying and selling large positions all day long. And there are some days, like today, where if you applied to me Coinbase or any exchange fees, I would have traded 5 figures in fees today. I would have paid 5 figures in fees if I traded crypto the way I traded stocks today. My style thrives in a fee-free environment or a flat fee environment. And as soon as there is a crypto exchange with a flat fee per trade basis, even if it's $20 per trade, you will see big money flock to that exchange. Do position sizes get bigger as I average down? No, I always keep them flat and the same. It helps with math a lot. And again, if I start increasing position sizes, I start running out of ammo sooner, which is not what I want to be doing. So I always keep them the same size for just scale-in simplicity. And I can, if we start getting real extreme and I think a bottom's really close, then I can start, putting less space in between those orders, but the sizes will remain the same. Long-term thoughts, we're in a very bullish market environment. We will hit a top. We will see monthly consolidation. There will be a whole new wave of people that panic. And you will see social media with fear. Again, these psychological cycles have been around since the beginning of mankind. And they are just manifested in the form of candles on these charts. And they are magnified because money is involved. Just imagine the future right now. We will see a time when everybody that's getting into crypto for the last 3 years has their oh moment and has no idea what to do because they've never seen anything like this and it's going down way more than they thought it would and they don't know what to do. It's going to happen. We just don't know when, and all we can do is try and anticipate when that will happen. There will be pain. Bears are going to make a bunch of money in crypto eventually. There's no point in trying to nail the top. The only way you want to be entering bearish positions on a very bullish name is if you're hedging. You don't need to nail the top to make good money bearish crypto once the cycle shifts. We can be 15% off the all-time high, and there'll still be good money to be made as a bear. Favorite trading pair? It's ETH, just for comfort. I've traded ETH the most, Bitcoin second most, and Litecoin third most. Link would be fourth. You want to know how real it got today? That's not lemonade. Bell rang for markets to close. We're trading cryptocurrency. We're peeing in bottles. All right, we're wrapping it up. That's an hour. I appreciate you tuning in. I need to sleep. Watching for the Bitcoin hourly lower high. We're watching for hourly higher lows. The lows must hold. Any short-term traders are using the lows as a stop, because if they break, it's definitely a red flag. If we change hourly trends, we zoom out and we scout a 4-hour lower high. Have a good rest.